Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a really special one for you. We're going to be joined by the co-founder and co-CEO of IREN Energy. This is a company we initially covered a few months ago on the channel. The shares were trading in the $4 range at that point in time. They're now about $7 per share, and I figured it was time to provide an update on this company, as this is one that I'm personally invested in and really optimistic about over the next few quarters. Now before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below what you think of IREN Energy, if you're currently holding shares, and how you think they stack up to some of the other miners we cover on the channel. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got Dan Roberts. He's the co-founder and co-CEO of IREN Energy. This is one that I personally hold. It's definitely a fan favorite, and we're really excited to have Dan here to talk about the business in a little bit more detail. So thanks so much for being with us here today.
Thanks for having me, Bryce.
Okay, so we'll get right into it. Since it's your first time on the channel, hopefully first of many, can you give us a little bit of background in terms of how you and your brother came about starting IREN Energy?
Absolutely. So if we step back and look at what Bitcoin mining is, it's kind of the intersection of a few things. It's Bitcoin, clearly. It's energy and infrastructure, and it's commodities. And I think if we step back and look with the benefit of hindsight at the trajectory that my brother Will and my careers took, it kind of led us to this point. We first came across Bitcoin 2013, 2014. Bought on the run up to $1,000. It crashed to 500 and we thought, silly nonsense, magic internet money, sold it all. And then as time went by, Bitcoin doesn't die. And we did more and more work. And around 2017, the penny dropped on Bitcoin. There's only 21 million. You can't kill it. You can't stop it. It's here to stay. It's probably going to go up a lot in value purely and simply because of that and the gold 2.0 analogy. So that's Bitcoin. My brother Will, he then was at Macquarie, the Australian investment bank, doing commodity finance for a number of years. Gold, copper, iron ore, doing structured debt, derivatives into those traditional mining companies. Was involved in setting up their digital asset team back in 2017, 2018. And then finally my career, also Macquarie, then helped set up an infrastructure funds management business about 13 years ago. Right place, right time. We grew to around 6 billion in assets under management. So these are conventional infrastructure assets: ports, airports, wind farms, solar farms, long dated pension fund, insurance company type money. And if you kind of look at it through the rear vision mirror, you can see how all those paths led us to where we are today and starting IREN Energy about 5 years ago.
Okay, amazing. And I got to ask, you sold at $500 of Bitcoin. Do you care to share how many Bitcoin you sold back in the day?
Rule 101 of Bitcoin, never talk about your stack.
There you go. Yeah, fair enough. I dabbled way back when in university as well and was really kicking myself. So we'll call that a mulligan. Now, Dan, for people who are unfamiliar with IREN, like I say, it's actually one of the more popular companies. We get a lot of requests for this one. This is one that I've been recently adding to in my personal portfolio. Can you give us a high-level summary of your company, your operations, where you're located, a little bit of background on the corporation itself?
Absolutely. And I think we've taken it through the lens of just translating our prior experience in terms of infrastructure commodities, and the sector is undergoing this institutionalization where gone are the days of sea cans, shipping containers, old abandoned warehouses. People now accept, the market now accepts, this is likely a multi-decade opportunity for Bitcoin, let alone the high-performance compute AI opportunity which we can come to. And that necessitates a different, longer-term approach to business. So we own all our own infrastructure. We own the buildings, the data centers, our own proprietary design, as you know, Bryce, the electrical infrastructure, the computers. We own and control our own destiny. We minimize counterparties. So in terms of where we're at as a business today, we've got 5.6 exahash of operating capacity. For some of your listeners, that might not mean a lot, but it translates to about 11.5 million in revenue, US dollars last month, against power costs of about 5.5 million. So about 6 million US of gross profit for the month just gone. And I believe that was based on an average Bitcoin price of around $27,000. So clearly cash flow positive and looking to grow. So we've recently announced expansion plans, looking to take that up to 9.1 exahash early next year. And then we've also started long lead item procurement to expand that even further up to 13, ideally next year.
Yeah, it's really astonishing once you start to look at the numbers. And I've looked at a lot of these companies, Dan, and the thing that a lot of people don't get is it doesn't take a big move in the price of Bitcoin, 1,000, 2,000, 3,000, to have a massive impact on your guys' profit margins, operating margins. So you're saying roughly now energy costs are about, what's that, 50% of kind of what you're selling for last month, or?
Yeah, so electricity power was 5.5 million against Bitcoin sales of 11.5.
Okay.
So a bit over 60% gross profit. You then got corporate overheads, development, additional capex that can come out of the residual cash flow. But that break-even price in Bitcoin terms would translate through to around, $12,000, $13,000 a coin.
Okay, great. And I think that's important to point out here, you guys. So 12, 13,000 per coin is kind of the cash cost. Now, you mentioned this a little bit in terms of the HPC strategy, some of your diversification in terms of the locations, but what would you say really differentiates your company from some of the other miners maybe we talk about on the channel?
Yeah, look, it's probably not a single thing. The diversification, absolutely. As an investor, you don't put all your eggs in one bucket. We don't want to either. We want to diversify by project. We've got 3 separate projects in British Columbia, 3 separate grid connections, 3 different geographic locations. We've then got our 4th project in Texas that we've announced and started construction of. The first 20 megawatts there is operating. There is another 580 megawatts of power available now there to expand. But we haven't stopped there. We've got a global portfolio of development sites. So if you look at the backgrounds of many of our team, I think there's about $25 billion of infrastructure, construction and operation experience. And a lot of that has been in the renewable space. So developing wind and solar farms. And this is the same game. It's the flip side of the same coin. Instead of searching for the best projects, the best sites that have got lots of solar or lots of wind, we're searching for the best sites that have got access to low-cost excess renewable energy. So you go and door knock farmers, you sign land option agreements, you put in grid connection requests, and all those activities, it's not high capex, but it takes a long time, multiple years. So over the last 5 years, we've been incubating this global portfolio of development projects across North America, Asia Pacific, and basically when the market's right, when the time is right, when those projects get more advanced, we can spend additional capital and grow into those markets and expand that diversification point. The other area that is different is we are the highest efficiency miner in terms of we mine the most amount of Bitcoin per exahash of computing power. And again, that comes down to our proprietary design in terms of these data centers. When you try and put too many machines in a shipping container or sea can, every time the ambient temperature hits 27, 28 degrees Celsius, the computers choke on themselves and shut down. That stops you operating at really high temperatures. And you would see at the moment that the global hash rate comes off, as it did, predictably, as it did last year. Because when temperatures spike in North America, a lot of these facilities can't stay online and they choke under that heat and they've got to curtail. Now, it's hard to distinguish between what's curtailment for power price benefit and what's curtailment because the facilities can't physically handle the heat, but that does explain some of the near-term global hash rate movement.
Sure, and I want to talk about that curtailment because I know you guys operate in Texas. You've got some big expansion there, so we'll come back to that one in a second here, Dan. But I did want to talk about last month's results quickly. You mentioned that you hit an operational hash rate of 5.6 exahash. I believe that was a record for the company, so congrats on that to start. Your plans to ramp up, I think 9.1, you said, by the early first half of next year. Can you talk to us a little bit about what this milestone last month means and why you kind of landed on that 9.1 goal?
Yeah, so the 9.1 is simply an expansion from 20 megawatts at Childress up to 100 megawatts at Childress. So the way that site works is we've got a 600 megawatt grid connection via a switch with AEP Texas. We then commission the full 600 megawatt high voltage transformer to step that down. We then step that down to a medium voltage, which is done in 100 megawatt increments. So we've already energized the first 100 megawatt medium voltage transformer, which feeds the initial 20 megawatts and will feed the next 80 megawatts that will get us to the 9.1 exahash. So civils have begun, construction has begun on building out that additional 80 megawatts of capacity. It will be the same design as we've done in the past, which are these 20 megawatt data center buildings.
Okay, makes sense. And you said you have access to 600 megawatts there at your request, basically, eh?
It's there. We've built the infrastructure. We've got access to the electrons. We've just got to build more capacity and use that power.
Okay, so that's actually a perfect segue. We're going to talk about kind of the expansion plans in Texas at Childress, phase 1 and 2. So is it safe to say that curtailments there would be optional for you guys, similar to some of the other operators, or are they forced on you based on kind of load on the grid?
No, look, they're not forced, but there's a heavy economic incentive to do so. And the way that I think about this, everyone speaks as if it's like a social good and everyone's doing this altruistically. Absolutely, it's a great way to give back to the markets. But fundamentally, there's an economic financial signal to do so. And the way to think about this is, let's say we've got power secured at 4 cents a kilowatt hour. We're then selling that power into the Bitcoin network at, say, 10 cents a kilowatt hour. And there's your 60%-ish gross profit margin that we referred to earlier. So every time we take an electron, we can monetize that electron at 10 cents a kilowatt hour into the Bitcoin network by flowing it through our computers. Now, if the market price of power is at 15 cents a kilowatt hour, why would we sell it into the Bitcoin network as distinct from selling it back into the market at 15 cents? Because all of a sudden, we've got an opportunity to generate more revenue. And the way we've done this, if we've developed an end-to-end software stack that does it all algorithmically, so there's no human intervention required. So every 15 minutes, there's a price point in the ERCOT market. Our systems look at what the market price for power is, what the profitability of the Bitcoin network is, and dynamically trade between the two to optimize the revenue opportunity for this business.
Wow.
So last month in July, I think we generated, was it $600,000? In power sales off only 20 megawatts of capacity.
Yeah, I think it's really important for viewers to understand that, number one, and differentiate that in their mind, that there is financial benefit for doing this. It's not imposed on the company, and it's a great secondary revenue stream for the business. So thanks for explaining that, and even better to hear that it's all kind of handled on the back end by the computers, eh?
It's also a key source of downside protection, Bryce, because all of a sudden we choose our own adventure. People say to you, so what's your power price? So what do you want it to be? We can do 3 cents, we can do 2 cents, we can do 1 cent. We'll just mine less Bitcoin for the month. So one of the key risks is around the halving, right? And the uncertainty. We all know that the price tends to rally 3 to 6 months after the supply shock kicks off another exponential run. But that interim period, absolutely, profitability is likely to fall. And if you've got the ability to switch your computers on and off dynamically to capture more of those low price intervals in the market, then we can always mine profitably. There are periods where we're paid to take power. The price goes negative. There is so much excess renewable energy up in that region of Texas where we could operate for a small part of the year with 2 profit lines. 1, we're paid to take power. 2, we're then paid by the Bitcoin network to transfer that power into Bitcoin network security.
Incredible. Well, like you say, good place, right place at the right time. Now, that's a good setup for the next one. So you're talking about the power of these computer networks and some of the logic that's been built into that. Can you tell us a little bit about your high performance computing strategy? I know you guys recently announced that you were going to revitalize this and bring it back to life. What's that going to look like, and what should we expect there?
Yeah, and what you're referring to there in terms of bringing it back to life, we signed an MOU with Dell Computing about 3 years ago to start bringing out their customers and hardware to our first project in British Columbia. At the time, the market was still really early. The opportunity in the Bitcoin mining space was real. So we prioritized that. But as we all seen over the last 6 to 9 months, AI, machine learning, chat GPT, like it has just made an enormous surge. The opportunity set looks real. We're continuing to have conversations with the hardware manufacturers, the resellers, the other cloud data center providers. We seem to be really well positioned. In fact, better positioned, it seems, than traditional data center providers because we have that experience managing high energy dense computing. So we are building fit for purpose facilities to manage computing applications that just require raw computing power rather than all the bells and whistles of the hyperscalers in capital city locations that are optimized for fundamentally different things. You know, lifetime cloud computing, your shared drive, really low latency applications. So we've got 100% renewable energy. We've got plenty of power available now, let alone the development pipeline where we can potentially pick and choose those projects as they're more suitable to HPC versus Bitcoin mining. We're involved in those conversations with the market participants at the moment. It continues to validate the thesis that this is real. And in due course, we would expect to try and do something.
Okay, great. Excuse me. And what I love hearing there, you guys, is how dynamic and flexible the business is. So there's so many variables here. Obviously, Bitcoin price being a very big one, the halving event coming up, power prices, and it seems like you guys really do have a lot of different levers that you can pull based on what you're seeing in real time. Hey, Dan?
I think that's right, Bryce. And when you step back, you're dealing in a market that's so volatile and you're dealing with these exponential opportunities, both on the way down and on the way up. And being flexible and nimble is absolutely fundamental to navigate that. And we've got this approach of always having the cheapest call options that we can in this business, whether it's new development sites, whether it's call options over power, whether it's capital structure, etc., because you want to capture that exponential upside. But you need to survive. You need to manage risk. It is all about your downside. And for Will and I, large part of our wealth is in this business. As founders, we've never sold a share. We have voting rights that allow us to steer the company with our board and allows us to be flexible, nimble, make the right decisions and then explain it afterwards rather than being worried about corporate bureaucracy, reactions, etc. And I think that's held us in really good stead and gives us that power to forge straight ahead, make the right decisions that are going to drive value for shareholders rather than be worried first and foremost what other people will think.
Yeah, it's music to my ears, and making those right decisions is so important, especially in a space like this that changes so rapidly. Now, speaking of number one or right decisions, what would you say is your biggest priority from now until the halving?
So priority is infrastructure at Childress. Building that out, getting as much capacity available as possible. I think that is enormous optionality. And the way I think about it is we need to buy miners. We could go and buy them tomorrow, but we think we're better hedged and there's better optionality for our shareholders in waiting. Prioritize the infrastructure, look to potentially double our infrastructure capacity from 180 to 360 megawatts. That will give us enough infrastructure for 13 exahash of hardware. Now, as we approach the halving, as we know, Bitcoin can do anything, right? If Bitcoin stays where it is or falls, we're going to see a bit of stress in the miner market. We would anticipate, if we've got cash on balance sheet, the ability to go and procure miners at heavily discounted prices. Flip side, Bitcoin rallies, happy days. We're in a good place. We've got near-term capacity. We can order the machines, plug them in straight away and really boost the profitability of this business. So we think the best hedge, the best optionality for shareholders is to prioritize infrastructure spend over the next 6 months.
Yeah, it makes sense. It's a win-win, right? Either making a lot more money off your current miners or you're getting more for less. So that makes sense. Yeah, I think that's pretty much it for my list here, Dan. So I guess final thoughts. Where can people find out more information if they're looking to get maybe make an investment or get in touch with the team? What's the best way to do that?
So we've got a website, as you'd expect, irisenergy.co. That's .co, not .com. We're on Twitter. I'm on Twitter. Give us a follow. We try to be active on our socials, keep people up to date. We've got a monthly report that we publish each month, which we try to get really granular. We believe this is all about transparency, educating investors on the sector, educating them on the challenges in our business, as well as the stuff that we're doing right, and bringing everyone along for the journey, because it is an early sector. We're all working it out for the first time, and being open and transparent, I think, is a strategy and approach that works well for us, and hopefully investors appreciate.
Hey, that works for me too. So I'll tell you what, guys, we'll leave a link in the video description to the website, to the Twitter account. If you're watching and you found this valuable, make sure you hit the like button. And if you have any questions that we didn't get to, Dan was bugging me before we started saying these were softball. I said, hey, it's your first time here. So Dan, next time you're on, we'll give you some more difficult ones. We'll get the viewers involved there, see if we can make you sweat a little bit. But we really appreciate your time today. We're looking forward to having you back, and all the best over the next couple months there.
Thanks, Bryce. Great to be here.
Yeah, take care.